Not gonna lie, it's not a video that I wanted to film, but I think it's a very important video that I make sure I put out, and we're going over the dangers of swing trading options and how I lost thousands of dollars. Welcome back to the channel, everyone. My name is Thomas. On this channel, we talk about carving our own path to financial freedom. If that's of interest, jump down quick, subscribe. I'm posting every single day. Hit the thumbs up button and comment below to be entered into a shout out giveaway, where at the end of the month, what I'm gonna be doing is shouting out at least 5 people who've been commenting and liking on the channel. So make sure you do that down below and let's get started. So if you wanna go back and check out a bunch of other videos I had on the channel, I talked a lot about trading options, and it was something that the summer of 2019, I was doing pretty consistently. I was doing a lot of, and so I want to go over kind of the dangers that I have kind of learned and come across, because I've had some videos that have been getting some decent amount of views, at least recently on my channel, talking about options trading, and I think it's very easy to see the good things and see all the positives, but I want to make sure I show you guys the downsides, the risks, the negatives, things like that, because I don't want you to jump in and think this is the best way to make money, because it's an awesome way as you start to learn how it works and how you kind of play the game and kind of get a handle on how options trading is. It's awesome. At the same time, there are a lot of risks and there are dangers that I want to make sure you're aware of. So at the end of the video, what I'm going to do is I'm going to get into how I got into what I'm doing right now and how I've actually achieved over 175% return on my money in the past 4 months. I'm going to go into that and give you guys an awesome bonus at the end. So make sure you stick around for that. But let's jump in, guys. So right off the bat, what are options and swing trading options? What's the difference? Day trading? What am I talking about here? Well, when it comes to stocks have options attached to them. What that means is it's the option to buy 100 shares of an underlying stock. What you can even do is you can even have the option to sell those shares. That's puts. The option to buy those shares is calls. And so calls, you're bullish. Puts, you're actually bearish. It's really, at the end of the day, a simplistic bet as to, is the stock going to go up or is the stock going to go down? If the stock goes up and you have calls, chances are you're probably going to make money. Now, there are some technicalities there, depending on the contracts, the time value, the strike price, things like that. Yes, there is there are some things there that can have an effect, but generally speaking, the price goes up, you're going to make money. And puts, if you have a put, price goes down, you're going to make money. And so it's betting one way or the other. Now, of course, there's technical indicators, there's fundamental analysis, there's potential news that you can kind of be thinking about what's coming up, and there's ways to kind of have an edge as to where you think the stock is going to go, but there are a lot of dangers as well. So this past summer, I really got into technical analysis. Now, technical analysis is really you looking at charts, support, resistance, trend lines, things like that. So I got into patterns, trend lines, all that stuff, and it was awesome. And it was really fun to actually look at the charts, see how things worked, and then buy options and see myself predict the correct movement of a stock generally, more times than not, at least initially, predict the correct movement of a stock. And when I did, I made money, and it was awesome. Now, it was not going huge. My position sizes were nothing crazy, but I started to up those sizes as I got more confident and as I had more money to work with. I even had days making $500, and I had days making $1,500, $1,600 in one day by trading options, because the awesome thing about options is that you don't need a significant movement in the price for the option value or the option contract value to move 10, 20, 30, 40, 100, 200%, even 1,000%. The actual stock does not have to move 100% for that to happen. It depends on the contracts, and depends on the time value, depends on a lot of different things, but if you predict the correct movement of a stock and you have a certain time value, you can make a lot of money. So when it comes to trading these options, I was doing a mixture of day trading and swing trading. I was not day trading at least early on, because I was actually working at an internship and I couldn't day trade options really. Maybe I did accidentally where I actually did have times where I would go to the bathroom for a very extended period of time, and I would just sit there on the toilet where I actually would not be going to the bathroom. I would sit fully clothed on the toilet, and I would literally be on my phone, and I'd be going back between Robinhood, where I'd be trading, and my TD Ameritrade app, where I'd be seeing like the live quotes of the data, and I'd be going back and forth, and I'd actually be trading. And there's one time where I made a couple $100 just sitting on the toilet, just in between like working. Well, I was supposed to be working, but I took a bathroom break, of course, and so that was what I was doing. But that considered, I generally tried to swing trade these things, so I wasn't actually going to be sitting there on my computer where I'm supposed to be doing work, and then at the same time I was trading options. And I was really doing that work primarily and going to the bathroom and checking up on things as the day kind of went on. And so swing trading is when you're holding it for overnight. So you're not trading it within one day. And the awesome thing about that is that you actually can't day trade more than 3 times in a 5-day period if you have under $25,000 in your account. It's called the PDT rule. I actually have a video going over how to avoid the PDT rules. If you want to go check it out, you can, but that's pretty much the PDT rule, and so there are some restrictions there, and so that's why swing trading options kind of made sense to me. But here's the problem. Swing trading options sounds cool, but the problem is you're holding a stock overnight. Sounds like, okay, who cares? It's overnight. There's major danger in holding a stock overnight. So with options, you can only trade from 9:30 a.m. until 4 p.m. That's Eastern time, okay, in the East Coast of the United States. That's when the market is open, okay? So you can only trade them then. You cannot have pre-market hours, after-market hours, there's none of that. So what happens primarily is a stock will move overnight. Stocks don't just trade during the 9:30 to 4 p.m. That's when most traders are trading. However, at the same time, there's pre-market and then there's aftermarket hours, which there can be movements in a stock. Those movements primarily come when there is news in the overall market conditions. Those things change. There's outside news, there's political news, there's something like that. Or there's specific company news, or there's related company news in a related industry or a company that's similar to this company or has, connections to this company. There can be news and that can drop at any time. Of course, it's great when that happens during the day, so you're able to monitor that. And of course, if something goes wrong, you can get out. The problem is if you have an option and it expires on Friday and it's currently Wednesday and you're sleeping Wednesday night and some major news of an Iranian strike happens and all of a sudden the stock market plummets, now what happens is you have now lost a ton of money because, or depending on how much money you actually risk on your option, but you could lose a lot of money in one shot because the next day that stock opens up significantly lower and you had calls. It was going across your trend line. Things were looking great. The stock was trending up. Everything was awesome. It was following your line. It was following your technical analysis. You were thinking, great. Then all of a sudden, major news, the overall markets are tanking tomorrow and your stock comes crashing down. You wake up, it's 9:30, the stock was trading at $300, now all of a sudden it's trading at $270 and you're like, oh my gosh, my contracts, my strike price is 305, I'm gonna lose so much money, what are you gonna do? And essentially what happens is by the time Friday comes and your contract expires, if your price isn't over that 305 strike price, you're out of luck. You're going to have $0. So that's the danger. And that is something that has happened to me. Of course, not specifically that example, but similar things have happened to me. And it's not a situation you want to be a part of because when that happens, it really is not fun. It's really not fun. There's not much you can do because ultimately what ends up happening is the next week, those tensions, the news kind of fades and your stock crosses back up over 300. It passes 305, it goes to 320. And you're like, oh my gosh. Well, too bad. You didn't have the right expiration date, you kind of screwed up and there's nothing you can do. So what I want to do now is kind of go over how you can avoid this from happening. I don't want this to happen to you. It happened to me. I don't want it to happen to you. If you're someone who's just getting into options, especially if you're a beginner, please stick around and actually pay attention the next few minutes. It's not going to be long, but let's get into it. So what you want to do here is you want to have time. Time is your friend, okay? It's of course going to cost you more money up front. So an option contract, the cool thing about option contracts that expire this week. So for example, let's say you want to buy Tesla. You want to buy Tesla stock and right now it's trading it's been all over the place lately, but let's say it's trading at $800 today. So $800, you want to buy a Tesla contract that goes out for Friday, and so let's just say today's Monday, and what you want to do is you want to buy them cheap, and so you'll buy the Friday contract, okay, so it expires on Friday, and you buy a little bit out the money, which means the actual stock has yet to hit your strike price, so it's out of the money, so a call in the money, your stock price is over the strike price that you bought at, and puts, if it's in the money, the stock price is below the strike price that you bought at. So let's say your strike price is $820 and you want to get, if you're thinking that Tesla is on a good trend line right now to get to $830 by the end of the week, so you're feeling pretty good and you buy those contracts and they only cost, let's just say, and Tesla contracts cost way more right now because it's very volatile, but let's just say, for example, they cost $1. So the contract costs $1, you gotta times that by 100, so it's gonna cost you $100 out of your pocket to buy the contract, but that's what you did. You're not gonna wanna do that. You're really going to want to have an extra week, 2 weeks, 3 weeks, even a month on your side. Now what's gonna happen is because of that time value, what that means is that Tesla could blow through and has a higher chance, or not a higher chance, but if it does pass that strike price of $820 or whatever, $830, whatever you had in mind, it has room to go way past that because there's a lot of time. There's a lot of time. Things can change. Things can kind of go upwards or even downwards, but that's going to cost you money. And so what it means is that that strike price for that contract is now going to cost you $5 instead of $1 to buy the Friday. It's going to cost you to buy next month. It's going to cost you $5. Now, in terms of your actual pocket, that's going to be an additional $400 to spend up front. And so that's going to be kind of, you're going to kind of sit there and think, man, do I really want to do this? And of course, you're going to want to do so because what's going to happen is this week's going to go by and maybe Tesla will get there this week. And the good news is if it does, if Tesla gets there this week like you're predicting, okay, you're even going to have that extra 3 weeks, 4 weeks on top of what the actual value of the contract is going to be come the end of the week. So you're going to have the increase in Tesla price your contract's gonna go up, and then you still got that time, so your contract will be worth way more than you paid for at the beginning of the week, but at least you have time on your side in case of any bad news or any bad market conditions or any pullback before pushing back up. You're gonna have that in your back pocket, and that's why time is a key aspect to options trading. So many people realize that, but then just say, you know what, I'm gonna risk it this time, I'm gonna do it, and they get screwed. I don't want that to happen to you, because if you do that and you go big, which I don't recommend, I have a video going over how to manage your risk trading stocks in general. If you go big though, and you lose it on that one shot, man, it's not gonna be fun, and you're not gonna wanna be trading ever again. So like I said, that time is your friend, that's a good thing. And on top of that, cheap options as a beginner is a great way to at least reduce your risk. So what that means is, let's say Tesla stock, let's say you wanna buy a contract of about $1,000. So Tesla's trading here at 800 right now, and you wanna buy a contract that expires next month at $1,000. Now, of course, Tesla is very volatile, so it's not gonna be this cheap, but let's say it costs 10 cents. What does that actually cost to you? Well, that only costs you 10 bucks. So 10 bucks out of your pocket, that's really cool. And then what has to happen is, let's say that contract goes up 100%. Well, now that 10 bucks turned to 20 bucks. And so that's a great way to start when it comes to initially trading options, is going for those super cheap contracts that are pretty far out of the money, but making sure you're looking for a move this week or next week. If you don't get it, you sell it, so you at least have some value on that contract. But if it moves faster, or if it moves in that shorter time frame, the good news to you is that you're gonna have that contract's gonna get closer to the money, and as it gets closer to the money, it's gonna go up in value pretty significantly in terms of a percentage basis. So 100% gains on a contract like that, that's awesome, and that's gonna be great news for you. And one last piece of advice here is, news is usually an overreaction. So whenever there's news and things like that, that's generally an overreaction. Things will correct. So if some major bad news occurs today or tomorrow, right, by next week, it will probably come back to at least closer to where it was in terms of the stock price. So let's say Tesla was trending up pretty nicely. Major bad news, some major airstrike, and that affected, major strike on the US or whatever happens, right? And that overall affects the entire market. The entire market comes down. Maybe it's not news directly at Tesla, but the overall market comes down. Tesla comes down from 800 to 750. Maybe next week it will come back up to 790, close to 800. So when that happens, at least that's a good opportunity potentially for you to come buy in, because the generally initial news is an overreaction, or at least just know that in the back of your head. So if you have a longer term option, don't just sell it right away, because it'll most likely come back up. Your stock will come back up, or at least things will kind of trend back to where they almost were, in a sense, unless it was direct news related to the company that could kill the company going forward, or it could skyrocket the company going forward. So let's get into the fun part, where I'm actually going to talk about how I got into penny stocks. So when I want to say penny stocks, really what it is, it's low float stocks, small cap stocks, things like that. And so what happened was, trading options was great. I was, it was fun. And then I had some big time losses, like I was kind of mentioning, things like that were happening. And when that happened, that's when I decided to say, hey, let me get out of options trading, where my investment could go to zero. Because if you invest $100 into a contract, but you hold the contract until Friday or until the expiration date, and your price is not in the money by that expiration date, you're out of luck. Your actual contract's gonna be worth zero. I have some videos going over how to trade options for beginners. If you guys wanna check it out on Robinhood, things like that. So check them out if that's something that you're curious in. But generally, I kind of was like, all right, well, what if I buy stocks that, maybe they go down 20% and I get screwed, but I'm not gonna lose my entire investment. I'm not gonna lose 100% of my money. So that's where I got into penny stocks, because penny stocks, the low float stocks, have a higher potential. They could run, okay? So they're gonna have a higher room to go up or down on a percentage basis. So that's gonna be good for making gains on the stocks, correctly picking the actual movement. And so a lot of the same concepts apply. The charting, the volume, the technical analysis, fundamental analysis, a lot of those things still apply, but there's a lot of other nuances to trading penny stocks. And I've kind of gone into detail on some of these videos. If you guys wanna go back and check those out, I highly recommend it. And I'm also making these videos every single Saturday, going over my trades the past week. So those videos come out every Saturday, so I highly recommend you check those out as well. That's pretty much how I got into it. And then going from there, I've been learning a lot from mentorship and groups and things like that, which I link down below, because I kind of want to show you guys what I'm doing, so you're not in the dark in terms of like how I'm coming up with these different things, how I'm coming up with all these different trades. Not all of them are going to be my own trades. They're going to be suggestions. I'm going to get them from ideas, and it's great to be a part of a group where you can kind of throw ideas back and forth, and that's an awesome thing, and that's why I value that. So I got into that, and then based off that, the past 4 months have been absolutely amazing. Recently, the past month, we've kind of steadied out. The coronavirus stuff has really kind of dampened at least a lot of the stocks that I'm trading, in terms of like they're not reacting as if they were like a couple months ago. And so December was a crazy month. Early January was a crazy month. And those months I really made most of my gains, but I made over 175% on my money in those couple months. And so it took my account from about $300 to $225. Now I've put in some money since, but it's trading up around $2,000 right now, $1,900 today. So it's pretty cool. I think it's an awesome, and I'm going to keep doing it because if it's working. So if it's working, I'm going to keep doing it. I'm going to keep pursuing it. I like it. I'm getting better and better in terms of the charting. I'm getting better at understanding how things work and why things are happening. So I really enjoy it, and that's just what I'm going to do, and that's how I got into those penny stocks. But with that being said, I have 2 links down below for some trading platforms, some trading brokerages, Robinhood and Webull. If you guys have one of them or don't have the other one, you can sign up to one of them, get a free stock for signing up, both of them, and then Webull, you get a second free stock when you deposit $100 into your account, which is absolutely awesome, absolutely incredible. That's an amazing offer they have going on right now. So make sure you sign up down below to those different links. I actually use both. I have videos on Webull and Robinhood on their channel if you want to check them out. Reviews, how I'm using them, things like that. Go back and check those out because it's very useful if you're someone on the fence, don't want to join Webull, want to join Webull, want to join Robinhood, not sure if you want to do this. It's going to be good information for you guys, so I highly recommend checking those videos out. With it all being said, make sure you are subscribed here to the channel. I'm posting every single day, and check out these videos right over here. I will see you guys in tomorrow's video. Peace.